Good Tuesday morning, quick sound check, and we'll roll. Okay, thank you. So let's keep it simple. They're below the pivot. 411.55 is the first spot that they can bounce the tape. We don't know they will. They're close by. Similar to yesterday, they can certainly bounce it here or they can go lower. The lower is 411 to 410.30. That's the first zone where we would expect a bounce back in the other direction if they don't bounce it at 411.50, 55. Okay, that's number one. If they rip them up, we'll deal with it at the time. They'll be going for the pivot at 412.30 and maybe more. The gap is right above that, so not right above, but it's at 413 in terms of yesterday's close. So we'll just know that in advance just in case. They will also become targets at some point if in a long trade, if they're bouncing nicely. They're in a range. Let's have a little bit of a different discussion. All right. Remember, we talked about this last week. Okay. Right here, you have a pivot low, a pivot low, and a pivot low. So here my cursor is 1, 2, 3. That's the bottom of the range. This is the top of the range. If they're going to come down all the way to the bottom of the range at any point, not saying they will anytime soon, but if they do, then there would be an opportunity with a spike to low and rip it back up. In other words, they'll get a little bit into no man's land, then they'll fight back, at least on the first run. So I just want to, that's food for thought. You never know what happens during options expiration week. Weird stuff happens. It's in the spirit of being prepared. I don't want to get caught with their pants down. I just want everybody to know what would happen if. I'm not saying it will, we have no idea, okay? Now, we have a list of stocks on the move. A lot of them aren't close, but some of them are big stocks and they can get moving right after the open. So some of the numbers might seem far away. After the open, they may not seem so far away. And if they are, so be it. We'll take what the market gives us. Alter ego is we wait for what we want. We don't need to be in a trade at 9:30 in 2 seconds, okay? It's a long day. If they give us something great, if they don't, that's fine. You have to have that mindset. We're rewiring the brain. You don't have to be in a trade. What you do is want to be in the correct trade for the correct reasons. I want to buy a good support area. I want to buy into a zone. I want to buy 2 or 3 times in a zone. Whatever makes you comfortable is what you should do, not what somebody else is doing or what your non-angel on your shoulder is telling you to be in a trade. Don't do that. Just be in the right trade at the right time for the right reason. Right now, they're hovering above 411.55. I would say there's a fair chance. We don't know, but there's a fair chance that they'll come and at least touch or spike this number. Okay? If not, all the way down to 411. That's the program. That stuff about the range, I just wanted to show you because I was looking at it this morning and it's options expiration. We got a half a minute to post time. And I've seen this before. I'm not saying they will do that, but you want to be prepared if they do that. Doesn't even mean they'll do it this morning. I'm just saying if. Okay. All right. Couple seconds. And they're off. Let them get the thing opened, do their thing, whip around, maybe come right down. Either way, we don't know. Just let them do it. 411.55 will be the beginning of showtime. If you're a one trick pony, one contract player, one entry type of situation, then you have to wait for them to go lower. If you're a multiple purchaser, multiple contracts, multiple whatevers, multiple entries, then you can do 411.55, 411, and if they go lower, you got one bullet or another little bit of dry powder. If they shoot up, they're going to the pivot at 412.30.
SE is at the first level.
All right. Looks like it already bounced.
Yeah, it was 1 penny shy.
Low is 63 against 62. All right. Well, there you go.
Because
that trade's over.
Why not?
There's a gap down below, just so you know. So if they came down and you didn't get an entry in front of it, and you want an entry before the second zone down here, then this gap right here is 76 bucks. Just saying. Funny how that wasn't the number, right? The number was something else and they bounced right off of it. Funny how that works. All right, here's a story. So let's say they get to 412.30 or they don't, either way, but let's say they do. This zone at the end of the white space at 412.50 is the gateway up to the closing price of yesterday. So just look at it that way. They're still bouncing around. It's 4 minutes into the day. Nothing happened yet. Qs are strong. IWM's doing about the same thing the spiders are doing. They're down 0.75% on the day. For a scalp with potential, I would say 412.30 to 412.50 is a reasonable opportunity, but if they start pushing above 412.50, they're going for yesterday's close. So that's the risk. That's an answer to Raf's question, is the pivot is short. Probably not as good as it was before they made the first run, first time, best time, but it's still important and it's still early. Semis are slightly positive. Transports are getting hit and the IWM's getting hit. Both down about 0.75%. So we've got a little divergences out here. Qs are going the other direction as the spiders are. Spiders are working their way up to the pivot. 412 for now. Below 412 opens the door for the lows. 411.55 is the number. Spike the low, hit 411.55. Maybe get into it a little bit, rip it back. That's on the table. If they start closing candles below 412, that's on the table. That concept's on the table, just so you know. Qs are taking off a little bit. Qs really are amazing. Driven by a small basket of stocks. It's not a healthy market. We know that. One of two things happens. Either the divergence between the breadth of the rest of the market catches up and everything rolls over, or the breadth expands and it gets better. And those big stocks were a leading indicator. We'll see. We don't know. Just food for thought. It'll go either way. Got to look at both sides. Just because the breadth is poor today in the rest of the NASDAQ 100 and the NYSE composite and stuff like that, or the NYSE and the NASDAQ composite, doesn't mean it can't turn around, doesn't mean it won't turn around, but it is what it is today and we notice it. We just look at both sides. We're the umpire calling balls and strikes. Be back in 30 seconds, no change. Here they come. 411.55 to 411. 411.55 is still the top end of the zone, so remember, okay, what we talked about before. You have to be willing to buy more as they get into it, if they get into it. Don't jump ahead of it. Just because they bounced in front of it doesn't mean they won't hit it. We don't get fooled by what the market is doing currently as it might be doing something different a minute from now. That's why we have to stick with the plan. If the plan changes or the plan doesn't work out and we have a new plan later, that's fine. In other words, if they don't hit it and they just start going up, there's a different plan coming. We'll see. We'll let the market dictate what we do. We don't dictate what we want the market to do. That's just gambling, Armand, just so you know that. I'm sure you realize that. And they get the rip back up in the other direction without hitting 411.55. 412.30 is coming. It's no longer a short, but 412.50 is a better spot. Here comes 412.50. Oh, look at that. Look at the Qs. Pretty interesting. You know, this is the buy the dip stuff. That's what I wrote this morning. I mean, that's what the whole premise is. It's not going to change until it changes. Stay above 412.50 and 413 is on the table. Get above 413. 413.40 is on the table. I'm not a shorter of this. Why would you do that? Just saying. It's just not that they won't come down. It's after they just came close of a number and ripped it back up right through the pivot. After they came up short of the pivot, it's just not a great trade. It's not a great setup. Wait for something better. Yeah, I got some 10 o'clock dater coming out. Thanks, Grant. That can move the tape, jolt it, show you where the Qs are headed. 328.45. Same numbers as yesterday up there. It's overhead resistance. You saw what happened. They hit it in the afternoon and they just were rejected. That was the 413.40. It's the same number on the board. It's possible, Lee. We'll see how they trade out for a moment. Lee's asking, is the pivot now support in a buy area if they come down to it? And it may be. You got to see what happens over the next few minutes. See how much it's support, how long they stay above it, and even if they come back to test it, we'll see. I'd rather buy 412, frankly, but it's possible. The Qs are just making a run for this number. Put it in perspective, the S&P is down 2 points on the day. Nothing is happening. Where are we? Right here. They're just eating time off the clock. Still, forget all the lines. They're above all the moving averages, eating time off the clock. And until they break down, or unless they break down, this is going to break up. As hard as it is to believe. A lot of bearish sentiment out there, a lot of crash videos. I see them. They'll be right sooner or later. That's correct, Jeremy. Well, there's your test of the pivot. This is just a whipsaw. 412 is the line in the sand on this one. Anybody buy in between the pivot and 412? Just curious. I know there are. Yep. 412 is the test. If they come down there and they get below 412, it's going to reopen the door for the spike the low and rip it back routine. If they stay above the pivot, 412.30, well, there you go. There's 412. There's 412. Spike the low, rip it back up in the other direction. 411.55 to 411 is that zone. Whoa, what happened there? Look at that. Whoa, not sure what that was. 411, holy smokes. I didn't even have time to move my mouse.
I do not have that 411 on my chart with trade station, FYI.
Looked and I do not either. Pretty interesting scenario there. Yeah, some of the platforms had it hit and some didn't. That's quite interesting. The whole thing is a little odd. You're right, Sean. Yep. A lot of them have it, apparently. Yeah, I've got it at the low here is 410.89. Quite interesting. Okay, we'll just assume it's good right now. Whatever the spike was, it is what it is. I'm calling this low of day, and it doesn't really matter. If they come down, 410.30 is the next number, and if they don't, it's not. It doesn't matter anymore what happened. It's weird, but there's nothing we can do about it. We've seen stuff like this before. I would say if you're, listen, if you had a resting order down there at 411, anywhere in between, anywhere that you picked it up, you need to have booked some profit. Most people wouldn't have done that, didn't do that, caught everybody by surprise. That's normal. If they come back down, 411 to 410.30 is the next zone. That's the way we'll treat it. 411.55, remember the 411.50, it's really the same thing, only just a little bit higher today through the math, but that's still important stuff until it's not, and they're hanging around. No, it doesn't work like that, Dennis. If you had an order in and they got below 411, you're filled. There's nothing to do. There's plenty of volume. It's just if price gets below, you're filled. If you didn't get filled, then it was really never down there. That's the way you got to look at that. Then it was really never down there. Then this is an anomaly on the chart. Some platforms have it, some don't. TradeStation doesn't have it. TradingView has it. Some of the others have it. So it was really never down there to fill you, and just look at it that way. Just a shenanigans situation. We'll leave it at that. Yeah, the ES wasn't down there. It was 33.75. I looked at it already, something like that on the low. And if the futures weren't down there, chances are it really didn't happen. Stay above 411.55 and they'll work their way back up. To where? 412. What's going on here? How many traders shorted the 412.30 to 412.50 zone up there? Despite what I said, how many did it? Okay, so I know we had some. Nice. Okay, so that was a nice trade. How many traders were buying 412.55 or lower and are in a trade or took a trade or whatever? Okay. And that's an example of, I give you the information and you're going to do what's comfortable to you. This is the, the psychology behind, not every trade is meant for everybody, because the more uncomfortable we are in a trade, the more likely we are to lose because we don't like it. And therefore our mind does crazy stuff. Well, when we're in a trade, some traders wanted the short, some traders bought it long. Is anybody in right now from a higher price for whatever reason? Okay, so Ron, you were buying the pivot on the way down, right? From the last spike. Okay. Semis are good. I'm just looking around. I am still a buyer at 411. 411 to 410.30. They came down there. Yeah, 411.55 is important, that's for sure. Now we know that, right? We knew it before, but now we know it as evidence builds that they're hovering around it. They're trading around it. They're stuck. They're a little below, a little above. They keep fighting back to it. That's evidence that 411.55 is important. No, Mark, not really. Mark asks, is there any significance to the shenanigans low of 410.89? And the answer is not really, because I can't really do anything with that information. I know 411 is important. Whether that tells me it's important, which it doesn't, but I knew it was important before. That kind of confirmed it when you have the shenanigans down there. Doesn't change the fact it's important, and there's nothing I can do with that information. So that's really how I look at it. Above 411.55 and it's 412. Just that simple. Don't make it any more complicated than that. I'm not saying buy it here for 412. I'm just telling you what's going to happen if they stay above 411.55. And if they get below, it's 411. That's it. Just taking a look at the transports, and this isn't a trade. I'm just telling you what I'm thinking. I think they have to come a little bit lower, like maybe 50 points. All right. Let's see if I can bring it up here. All right. They kind of come down a little bit lower, find support in this zone down here, and they would bounce. That could be an indication. I'm watching it, maybe a morning low type place. Just thinking out loud. Just thinking out loud. Close. There they go, 412. There's your 412. Don't short 412 because the pivot's right here. There's no short here. This is just a rodeo. I mean, this is, again, the pivot will be overhead resistance, but it doesn't mean it's always a short. Well, overhead resistance. Now it's still on the table. It's a low price stock. It's not 150, 250 bucks. So you narrow the, did they get too close? I like it because, and here's just one of these, put it on a sticky note. 30 bucks is a number. All right, it's an interesting number. All right, so they're close to 30. The number's right above 30. 30 bucks should bounce the tape, spike of 30. So therefore, it's still good. There's a little bit of magic to 30. The pivot is 412.30, Raf. I'm not sure. You just shorted that again? Oh, still short? Okay, never mind. Good trade. Well, now it's off the table. See, when it was down here, it was still on. Now it's off the table. You got to make them spike 30 at this point, at least. We'll leave it up for a while. 411, still 411 and 410.30, still the zone. Let them spike that tail. That low is 410.89. 411 to 410.30, 410.89 is that spike the low routine. Still good. There it is. Okay, they're in a zone. Showtime. There you go. Stay above 411. Oh, and she's good. Don't, and she can come down to 410.30. Doesn't have to. She doesn't have to. This is a zone. Anywhere in the zone. They're in the zone. Traders are long. Now you're waiting. They either come down further or they bounce. Come down further, 410.30 is the next spot. What they're doing now isn't necessarily what they will be doing a minute from now. Either direction. We just have to understand the market's going to do what she's going to do. We have the numbers. We have the support. They're going to work most of the time. Sometimes they don't. Below 411.30, door opens for 409.50 as a just in caser. We should know that. Doesn't mean they will, means they can, means we're aware of it. Could take a little time. And here come the transports down that 50 points I talked about. Boom. Not this. What am I doing? I have another symbol on my other platform that's the other one, so I get confused. Close. Right down here. 13.625. Something like that. So just another 20 points or so. That's a good spot for the transports. If they start to bounce, you can get a bounce. As a canary in the coal mine, you can get a bounce in the other stuff. Patience, alter ego stuff. Just because they're in the zone and they didn't bounce at 411 on the button doesn't mean anything. Okay. Okay. A little better. They start as a scalp with potential. We turn them into a base hit, and then it turns from there into a risk-free, emotionless trade. There's your 13.625. It's a give or take, but this is a good spot. Not saying buy the transports, I'm just saying it's a good spot. That's a little bit better in the spiders. You got to take some off in front of 411.50. That's the scalp. Maybe they spike it 411.55, but from a trading perspective, you need to book a base hit if you're going to try and let it ride. Talked about it yesterday all day. Look at this bounce, I told you. If you're going to let it ride, you got to try and let them ride, and you never know which ones are going to give you the rocket ride, but you got to put a base hit in your pocket. That's just the way this business is. That's the way you find success, is by piling up the base hits, and then some of them turn into Whopper Juniors, Whoppers, home runs, all that kind of stuff. Okay? Okay. That's pretty good. They're doing okay. This is trading 101. If you're in a long trade and have not exited, you don't let this one go bad on you. Okay? You can always buy it lower. They may come back to test 411. They may spike it. They may spike the low and rip it back. They may go down to 410.30. We don't know. But at this point, if you're either have taken a profit, you don't let it go bad. And even if you haven't taken a profit, you don't let it go bad. You can buy it lower. You don't let it go bad. If you bought a spike of the previous low, then you can hold it past 411. If you bought 411 because you had to have it, your choice. The benefit of patience. Those that waited for a spike of the low have a better entry. Those that had to have it right away haven't rewired their brain yet to be patient. And I get that. It's a process. You have to convince yourself it's the right thing to do. And until you can do that, you're going to keep buying, the higher prices. Another test of 411 doesn't mean it's not working, just by the way. Notwithstanding the stuff I said before, but you don't let it go bad. But testing 411 again isn't a bad thing. It's just another test of 411. If they get below, that opens the door for the lows or lower. There you go. This bounces, this will bounce. See how I was watching that? Canary in the coal mine, important number, bounce off an important number, pull the market up, mapped it out ahead of time. That's why I said I was focused on this. Every day it's something different. I just caught my eye. And it kind of that number flashed out at me like a sore thumb. And there you have it. How do you like them apples? How do you like them apples? Not a bad, you know what, Raf? That was a good idea. That was a good idea. So that's using your smarts. Raf scooped up some UPS when the transports got to their number, figuring all the transports are going to get lifted. Wasn't a bad idea. I don't even know what happened, but it was a good idea. There you have it. Look at that. One of the bigger transports, right? Nice job, Raf. See, I give you the information and everybody sees something different. We talked about that last week. It's what makes a market. No, it's just the index, Mark. So you have to have the data, but it's not futures. It's a cash index. Shannon, 6 points, one left off the low, spike of 411, nice job. 411.55, resistance out in front. That trade from a scalp perspective is officially complete. The high is what? 411.55. Apples? You like them apples? You betcha. Let me get a sense for traders that followed instructions. You bought somewhere below 411 and you exited the scalp portion with potential in front of 411.55. Who's out there? Yeah, if you just follow instructions, you'll be fine. There you go, a whole list of people. That's what I like to see in a ball club. Look at this. This is what the trailer is made of. Driver's seat, right? How about this trade? You had 10 points in a couple of minutes. Not a couple of minutes, but short time. Yeah, Riz, that's fine. That's because you don't believe in the numbers yet. That's okay. That's just the reason. It's not anything bad. It's just you're not convinced that what I'm doing works. Great job, Patrick. Jeff, I mean, all of you. I'm just looking at the last few. Shannon, Ron, Marcus. I mean, just the list goes on. No, Jerome, but if they spike the low, the door's going to open for 412, 410.30, and that's another opportunity if they did that. Scott, $5,300. How you doing? How's your day going? Look at this. This is why we take profit. Obviously, if you're holding a trailer, it's fine, but you should be out of at least, at minimum of 60 or so % of this trade. Nice job, Gerardo. Dennis is all out. Nice job. This is it. This is what you signed up for. The morning trade. That's it. Let's see if it was the same number, Sean. Whoops, not IWN, IWM. What was your number? Same one? I was at 25, and what's the low? 25. How you doing? Same number. 30 and 25 is the same thing. It's a nickel. It's just a rodeo, by the way, in the spiders. This is rodeo. But you can play a rodeo. This is a nice reversal candle on this 15-minute chart. Doesn't mean they have to come up back down, but they can, retrace part of it. Just the way you look at it. Looking around, see if there's anything else moving out here. The only thing you should be in now is a trailer. That's it. I don't see anything worthwhile. Okay. No, it's never easy, Mike, but I get what you're saying. You still have to do it. This goes back to, when I was on Wall Street and I used to have these, we'll call them debates with other people, fundamental traders, which I don't even think there is such a thing, as opposed to technicals, and taking technicals a step further and saying, hey, there's a lot of math involved here that you guys aren't really considering. And they all looked at me like I had three heads, and you pound the table enough times and nobody pays attention to you. You say, well, I'm just going to take my ball and go home. I'll do it myself. And so I still contend the market is based in mathematics. Can't always get it right, but even when I'm wrong, I kind of know why I was wrong and what they're actually doing. I just didn't consider that they would do the thing that they're actually doing when I'm wrong. I thought that the number would work, and that's just the market. Like right now, if they spike the low, the only thing I'm interested in is 410.30. Some of you will buy the spike of the low and not wait for 410.30. That's your choice. That's okay, but I would wait for 410.30. And if they give it to me, great. And if they don't, so what? It's the whole package, Mike. It's the instructions, but it's everything. It's the whole package. The psychology, the emotions, the alter ego stuff, all the things I talk about every single day, all weave together and help the success. You can also, and this is kind of an after the fact thing, but just so you understand how it works, when they hit a number and they hover over the number, I call that eating time off the clock. They're hanging out for a cup of coffee, whatever. When they bounce off a number like they just did, not down, but up, right? When they come down here and they just have this rocket ride, that's the trade you're looking for. You're looking for a reaction off of a number that gives you a juicy trade. That's the morning trade. I'm looking for the number that's important during the morning rush that they're going to have a rocket ride from. Not going to be right every day. They're not going to give it to you every day, but that's what we're looking for every day. That's what I'm looking for every day. That's what I'm looking for starting at 6, 7, 8 o'clock in the morning, whenever I can see it. What's going on there with RH? Let me see. RH is a tough stock to trade. It's kind of thin, right? Let me look at it on my other screen. It's very thin. You got to be careful with that. I'm going to see if I can get you a good number. I know you're already in. This is for Thomas D. That's your trade. I'm going to try and help you out. Bear with me. Not sure what was going on there, but here we go. It's 242.20 on RH. That's my number. If they don't get there, they don't get there, but that's the place I would be interested at the first place. It's a thin stock and it can move a lot, so be careful. Now it's just a chop shop in the spiders, right? Important, we know that. I'll be back in a couple of minutes. I'm gonna take a walk. Nice job so far, everybody. Nice job this morning. Be right back. I'm back. It's quiet now. That's going to be an important number too. It's really 412, but it is what it is. It's worth putting up on the board. It's nothing to do with it right now. I'm just telling you that's another place of overhead resistance. Any questions, comments, complaints? Not in that order necessarily. Now it's quiet. Let's see what happened there. See that? 50-point bounce. Sometimes something just hits you and says, this is important. And I don't know what it is. I don't know why that did today, but it did. Maybe it's intuition. Maybe I've been doing this a long time. Yes, Inga. There's a whole product out there for that. They should work their way back to the pivot. Should and will they are two different things. It's more of an opinion, and I'm not going to say come hell or high water. I'm going to say they should try and work their way back to the pivot. Anybody still long from before holding a trailer still? I know there's some. Okay. Yes, Inga, this is for day trades. This room, what you signed up for is intraday trades. And if you're new, I wish I knew that before. I wouldn't do anything. I would just watch. You're on a trial. You don't have to do anything. You're not paying for it. It's not for you. It's not for you. Just watch and learn. You got to learn before you earn. Doesn't matter. You're new to me. You're new to this. You're here because you were looking for an answer. So we're going to rewire your brain and we're going to break a lot of the bad habits that you have. Okay, David C., welcome to the room. Nice job. Be careful with that sim trading, Mark, because you don't have a stake in the game. You're never going to get the full effect. Try the micros or very small share size if you're with training wheels on type thing. That's up to you. Yeah, sure, I get it. I'm just telling you what I think. So anybody holding a trailer, you're looking for the pivot or more. I don't know that they will give you more. They can give you more. I'm just saying. And I think they'll give you the pivot sooner than later. 330 would be the next spot. There's really nothing up there, Armand. Nice trade. Depends on what the question is, Mike. Try it. Good job, Armand. Look, as long as you are learning, you affect your own trades, that's fantastic. You want to trade the Qs instead of the spiders, they all bounce together. There's nothing wrong with that. It's the ugliest trade I've ever taken. That doesn't matter. There's no use for that information. Sorry, Mike. Now, I've had ugly ones, but these are years ago. That it makes no difference. Everybody's had ugly trades. How about you getting a halt and it keeps going when the halt's lifted and nothing you can do about it. Gaps down again. How about that trade? That's happened. Not the spiders per se, but a stock. Doesn't matter what it is. AMD, let's take a look at AMD. We don't need this stuff. Yeah, they're a double top. No magic to double top. Yeah, David, just double top. Just no magic. They test it, they get through, and there's another top right there, right? What's this one? This is no magic, 104.59. So if they get above 102.43, they go up another couple of bucks up here. That's really where they are. 108, 109 is 108 to 110 is overhead resistance. 108 to 110 overhead resistance. Before that, they're just testing these and you don't know which one's going to reject price, if at all. But 108 to 110 is different. Let me double check that on another screen. Hold on. Yeah. Yeah. 108 to 110. AMD. Well, you can choose whatever you want to trade, Inga, any way you want. I'm giving you the numbers and the direction. If you do a spread, then you're just limiting your return, you're hedging. That's a indication that you don't really know which way the market's going to go when you hedge. Many traders in here will use the futures contracts, the MES or the ES contract. Some use options, some buy the spiders, some buy the Qs, some use the NQ, which is the futures for the NASDAQ 100, any and all. And so that's the way it's done. It's up to you. I'm giving you the information. Your choice is what you want to do with it. And that's what you'll learn over time. I'm rewiring the brain to say, hey, this is the way the market works. These are the numbers. This is support. And this should bounce the tape. How you want to trade it is completely up to you, because you have to do what you're comfortable doing. Otherwise, you won't have the same results. If you're uncomfortable, you'd rather be out of the trade psychologically than in the trade, and you'll exit in advance. You'll take a quick loss. You'll do things that you would not normally do when you're comfortable in a trade. Write that stuff down, put it on a sticky note. That's why you have to do what you're comfortable with. Some traders like the shorts better than the longs. Some traders like the longs better than the shorts. Some traders like stocks on the move. Some like all of the above. Just, there's something for everybody here. You're welcome. I'm just hanging around discussing stuff right now. There's nothing to do, right? The market's floating around. There's nothing to do unless they did something. I'll be back in 30 seconds. Okay, I'm back. 411.55. Nothing to do with it. Just is what it is. What does that mean, Mohammed? I'm not sure what you're referring to. Stabilization. Good question, Lee. That is the case. That is what I wrote in the notes. 410.30, if they spike the low, if they came down, the next spot is 410.30, and you can create a new zone between 410.30 down to 409.50 for a bounce back in the other direction. Same trade. Some Sally, the customer service rep work. Let's hang out for another few minutes here. Anybody have anything else? Very quiet. Now they've gone to sleep for a while. This is what we talk about with the morning rush. Once it's over, you get into that late morning, lunchtime period where it just slows down. Nice job, Phil. Let me take a look, Blaine. I'll be right back with that one. Yeah, Blaine, I would say 1930. We're talking about PENN, P-E-N-N. 1935 is a gap. Let's see if we can see the gap. This is no good. It's way back. Got to turn on the way back machine. Should have used the weekly. Here's a gap. 29.14, 29.35 was your number. That's a weekly number. But this thing's ugly. Oh no, that wasn't the gap. I'm sorry. It's down here. No? Yeah, 1935. Sorry. That's the one. Yeah. That's your spot. Should get a bounce in there. If they spike it, they come down a buck or so. Yeah, you're right. Sometimes you just get one. Sometimes you get zero. It's rare, but it happens. Sometimes you just get one. And if that's what it is, you have to be okay with it. Because if you're looking for another trade, then you're probably in the camp of over trading as a general rule. Not that I'm not looking for another trade, it's just I'll spot it when it gets there. But if I'm saying to myself, hey, should I buy this to get up to the pivot? That's guessing. And we have to get out of that habit. It's a bad habit. No, there's not many blank days here. That's correct, Grant. It happens. It'll happen in the summer, you'll see. Buying a break of the low. Buying a break of the low is not a bad thing. Oh, selling a break of the low. Selling a break of the low, Shannon. That's what you're talking about. Yeah, that's no good. Yeah, I know you've mentioned that before. We're not going to do that. Yeah, one and done's not bad. It just is what it is. You take what the market gives you. Once you can wrap your head around that and accept it, then your results will skyrocket because you'll stop doing stupid stuff. I think, and this is just a guess, some of you can confirm or deny this. I think there's probably a lot of trading rooms out there that have a fear of not enough trades. And they have a fear that they're going to lose subscribers because they don't have enough action. And that forces them to make guesses. And they don't know what they're doing anyway, most of them. But my guess is that that exists. So they're going to be making 3, 4, 5, 6 trades a day at least, just because they believe that the membership needs action. And what the membership needs is to learn that less is more. And it's a very hard concept in this business to get around. Thanks, Shannon. Everything is almost like the opposite in this business. It's fascinating. What I mean by that is the opposite of we need action to keep the members happy is we need to teach the members that they only need to be in the trades that make sense at the right numbers. And if it's 1 or 2, then that's fine, because your results will skyrocket because you're not taking the losses on the guesses. We're not going to win every trade, but we're going to win most of them. You can't win every trade. Just, I don't even try. I just do the same thing over and over and over again, assuming it's going to win, assuming it's going to work, with the full and complete understanding that some of them won't. And you adjust accordingly. You have stops, you have zones, you have other numbers. You adjust if the market is handing you a potential shitburger. There's a way to trade out of it, or we take a loss and we move on. One of the two. We'll run to 11:30. Frankly, we don't even need to come back at 12:15. I can give you the whole layout. It's not a big deal. Sometimes this is what, and this will happen in the summer a lot. They're just going to float most of the day. Narrow range, unless things get wild in the summer, but there'll be a portion of the summer where it just floats around. Maybe. Just eating time off the clock around 4:11:55. That's all that's going on here. Under, can't close above, right? But that doesn't mean it's bearish. It just means they're building energy to go higher. And here we go. What was that close? 56. Any accidents or coincidences? 1 penny? Come on. Again, I say this every day or almost every day because I want you to start to do it, which is I just watch the tape. Sometimes I'll stare at it for a long time, and I just watch what they do around these numbers, and I watch the patterns that form, and I watch how long it takes for something to happen sometimes. I just watch what they're doing, and it's not that I'm looking for something. I have an open mind. I'm just watching, and I notice things, and you'll notice things too if you just watch. That's how I learned everything. Just watch. And you got to watch a variety of different time frames. Watching this doesn't tell you anything about what's going on here. They're all different. Is this a move down, sideways, bear flag to another move down? Could be. Could be. You look at this 120 chart. What did we say yesterday in the video? They tested the high or near the high, close enough, of this breakdown candle. That's a wedge, and here they come. So are they going to come all the way down, or is this just more of this back and forth in the range? Just the way to look at different charts. I don't necessarily have the answer of, is this going to be? I don't know, but I know one of the two things. Therefore, when I look at each and every chart, I know what they're trying to do if they're moving. And things morph from short time frames to longer time frames. Things on longer time frames develop over a period of time, and that happens in short time frames. And therein lies kind of the secret sauce in how some of these trades get put together. The premium burn this month must be miserable. Oh, probably. Shannon's talking about the options in terms of when they're stuck. It's the time ticks away and the premium gets sucked out of them. And if they're below the strike price, they melt away. Yeah, of course. 1 month ago, the open was 412, 411.99. About that. Shannon brings it up. Thank you. I'm assuming it's right. Interesting. We've gotten nowhere. And you look at the daily chart. Well, better yet, let's look at the weekly chart. What do we have? Weekly close 411.59 last week. Weekly close the week before 412.63. It's a spit and distance, right, on a weekly chart. And this week, it's not the close, but this week we're at 411.75 right now, 70, whatever it is. We've gone nowhere. And hence why I bring up that weekly chart underneath the 100 period moving average every single night. As long as they keep doing the same thing that they're doing on a weekly basis, there's going to be another leg higher until that fails. Can't guess that it is or isn't going to happen, but that's what's going on. And that's why I show that every night. There's that 411.85, 412 area, overhead resistance. Not that you should have done anything with it, I'm just saying. Well, the Q's got to their number and finding overhead resistance. And for those of you that haven't heard me say this before, overhead resistance has two phases, potentially two phases. The first phase is price stops going up. Support is price stops going down. The second phase is they go back in the other direction. And we don't know they're going to go back in the other direction until they do, but the first phase is they have to stop going up. So you can see, for example, in the Qs and the 411.85 and these spiders, that those two numbers were overhead resistance. Now they're pulling back, so it's obvious now. But overhead resistance has two phases. First, price stops going in the direction it's going, up, resistance, down, support. It's a nice little pullback on the spiders. It's only 30 cents, 40 cents, maybe 50, whatever it was. But you could see that was resistance. What was the high? 97. Any other questions, comments, complaints? I think I'm gonna wrap it. Don't do stupid stuff. I'm gonna adjust the numbers and you can snapshot it. Give me a second. Okay. You could snap those numbers, write them down, whatever you want to do, put them on your chart. Those are good for today. Each one of the ones above price is overhead resistance. Doesn't mean it's a short. That's not the same thing. Below, below, support. There is an opportunity at some point today if they spike the low at 410.30 to 409.50. That's the new zone. Opportunity if they did it. Nothing else. Quiet morning. You know what? We'll just take it, go about our business. Come back tomorrow in uniform, ready to go. Maybe they'll give us 3 tomorrow. Maybe they'll give us 1. We don't know. Doesn't matter. Whatever the market gives us is great. Our objective is to be right. Market will decide how many times we get to be right. Now it's mush. It's quiet, slow. It's mush. You need participation. Last call for alcohol. I'll give it 1 more minute. For those of you who are new, wondering, hey, how come this is only open for 2 hours? It's a morning business anyway. This is not an afternoon business for a multitude of reasons, which I'll explain more another time. Namely, you run out of time on the clock. You don't have the same participation. It's not the same market. The morning business is not the same as the afternoon business. Just because, and I love to say this as much as I can think about it, just because the market's open all day doesn't mean you have to patronize the market all day. You don't need to shop there all day long. You just need to go in, get what you want, and get out. When you can wrap your head around that and do that and be okay with that, your results will skyrocket because you will eliminate a lot of mistakes that happen in the afternoon that you do, some of you. The only thing I would consider is 410.30 to 409.50. Some of you will give a shot at the spike the low and rip it back up before they get to 410.30. That's okay, as long as you're willing to purchase. 410.30 and 409.50. If you're not, then you wait. Remember what we said before with this 30-minute chart? Were they just making a bear flag for another move lower, or are they just going to test the low? They're going to rip it back up? You have no idea. What we do know is if they do get below the low, there's an opportunity down here. That's what we do know. I'll just hang out for another few minutes just to see what happens here. Thing out some stuff in case you heard that. They're just testing stuff. 411, 411.03 is the current low. They're testing traders' patience who are long. They're testing numbers. It's mush. You don't need to do anything with it. You don't need to shop in the market all day long. Just get in, get out. You want your pound of flesh. The market, you have to look at the market as a vehicle that gives you an opportunity to book a profit. The more you stay there, just like a casino, the more the odds go in their favor. I think I've said enough today. I'm going to wrap it. Be happy with what you got, move on. And we'll be back tomorrow in uniform, ready to go. Enjoy the rest of the day. Don't do stupid stuff. Walk away. You don't have to have anything else. Walk away. And with that, enjoy the afternoon. I appreciate everybody. Nice job today. Most of you did real well. Probably most everybody, almost everybody. I don't know, but I know a lot. We'll just leave it at a lot. Appreciate you all. We'll see you tomorrow.